mothered a baby. So when I got the role to help with FSD's strategy, because when we got funding as a network, so FSD Kenya, FSD Africa, and FSD Africa Investments. And we were also tasked, or CAHF was tasked, to come up with the strategy. And Kessia asked me to work with her. And that later I joined FSD Kenya as an employee. So we discovered we finally had the way to find out about what was going on that we didn't know that much about because we had money behind us. So we would call partners or we'd call players and say, can you tell us about what you've done? We'd like to know because we actually are looking for investment opportunities. And we learned so much. Like, I did not know how many initiatives had taken place with decent amount of funding, but then when you ask them, so what was your outcome? Oh, we intended to do 10,000 units, but we did 200. Why? The value chain barriers. We also found, interestingly, that the microfinance, which is not being monitored as well as it should, is doing hundreds and hundreds and hundreds of units daily, and part of it is because they're not over-regulated. So I had no rural experience before I joined FSD, but I've been doing more rural just because that's where there's less barriers to stopping you doing things, you know? So that's been an interesting thing. So what we discovered after very intense 2 months is finance is not the main barrier. Imagine that. We've all been looking for finance. And I work for an organization that's about financial inclusion. You know, it's about creating financial products. But our strategy was very much, finance is not the barrier. We should not be embarrassed if things don't work because we tried our best. Our assumptions were wrong. Why were assumptions wrong? It's because we didn't have the data. And so we created a project called Open Access. So whoever may know that my sister company, FSDAI, has invested in international housing solutions, it was not for the promise of housing units. It was the promise of data behind the delivery of the housing units. Because both through the strategy and my own experience of trying to create a portfolio of affordable housing units in Kenya, which I did to learn. So I bought 2 units and 6 projects, which were between 2 million and 4 million shillings each. And I took family money to do it. And did they get their 8 to 12% return? No. They have 0 to 3% a year. Do I blame the developer? No. The value chain is very difficult because I sit on both sides as an investor, as talking to the developer. I really understand that, oh my God, you're just stuck with getting your mortgage registered. Oh my God, you're just stuck with getting your approvals. Oh my God, you have to pay 2.5 million shillings for an electricity transformer, which is going to serve the whole neighborhood you're opening up. And you can't profit from it. You can't charge your neighboring developments for it. So we have solutions we cannot implement, particularly because urban Kenya is overly regulated with regulators who don't talk to each other and are rent-seeking. So we really set out to say, let's collect a body of data to support the developers and the investors to learn more about the challenges and hopefully, maybe not, but hopefully that data of evidence will lead to small interventions where we're working with government, working with regulators to reduce the value chain barriers. So that's the baby, I feel, that Kessia and I have together. So without further ado, I think we've got a few presentations to share with you. So one thing FSD did is, if we give you money, we want to know about you to detail, and we want to be able to share everything about your journey, which is not going to hurt your competitiveness. Obviously, we want to make markets with the wider market. So those were the 2 principles. And it's hard to collect this data, but you know, it's been hard to create it, but we're making baby steps. I think just like raising a child, it's not the idea and the funding behind it. It takes a lot more. So I think sometimes being a parent helps in this industry or any industry, because your expectations, like I keep thinking of it as, my work is just like raising a family. I can't be that, things take time, but you nurture it. So I don't know which presentations first. We all have very short presentations we'll fly through. Okay, so we have 3 presentations. One is for work we're doing with the pension administrator to do demand segmentation of the pension book and the insurance book. And what we're hoping from that is that we will learn about how to create the right product for pension contributors to access housing. So we'll whip through it because I know we don't have time. But Zamara is the pension administrator. Can I use that? Sorry. And really the reason we partnered with them is they want to understand housing. They've built a housing project that they thought would be very profitable, but they faced a lot of challenges and are doing tenant purchase. And they also are very data-driven, and they're at the forefront of policy. So Kenya has 2 pension regulations that work for housing. One from 2008 has never been used, and that is you can create a second charge on 60% of your pension pot and use it towards your housing. But nobody has operationalized it, and we want to try operationalize it. We believe that having a second charge is a better way to access your pension savings rather than what was done later. But it was never operationalized. I think banks were not willing to reduce the interest rate. Banks may have been lazy, we don't know. But that's still, we hope it's in law, and that's why we started off with this. The second was in 2020, the government passed a regulation that you can withdraw 40% of your pension and use it towards paying for your house. But in typical government fashion, there was very little stakeholder engagement. We also thought we would try pilot that, but halfway through this study that got quashed by the High Court, because as the pension industry said, we're too fledgling as a pension industry to remove our pension to pay for housing. We're not ready for it. So that law is no longer there, but we're hoping from this research to use it as a foundation to pilot with a group of pension contributors to actually create a product to take a second charge on the pension pot. So it's a regulation from 2008 we hope to start a pilot with. So very quickly, we had a phase 1 and phase 2. All this will be in a webinar we're doing in November. This is really just concluded work. The phase 1 was looking at the whole pension book. The phase 2 was taking interviews and trying to understand people's housing preferences and affordability. So this is the dashboard that will be available to everyone. You can log in. So all the data, obviously with data protection in mind, etc., but all the data itself will be available to people. So you can look at the segmentation yourselves. And a few highlights of what we found. So phase 2 was 2,000 people responded, which is a pretty decent size, It's not huge, but so what did we find? 65% rent homes, we expected that. 18% are owning their home while they have a mortgage or other way of paying off. And 12% actually own their home outright. We looked at the type of family size, their industry, so no real rocket science, but we're really looking at nuclear families, largely in education and financial services, largely in Nairobi. That's kind of the demographic. Where do they live? Kind of what we expected, mainly in apartments, 2 to 3 bedroom. Most of them who own have constructed it. So it's the typical, you buy a piece of land and you construct it. The location for people who own is mainly rural. And then the purchasability analysis was very disheartening. So what you see on the bottom slide I'd like to draw your attention to is the proportion of income already dedicated to debt. So you can see it's a pretty high proportion. So while people do have aspirations to buy, there's a very high reliance on debt. And this is not debt for housing. So I think that's something that we don't know enough because our credit information sharing doesn't work. You can't know enough about a family on their current debt status unless they tell you. Because they could have a loan with a microfinance institution, they don't have to tell the Credit Reference Bureau. They could have loans with other higher purchase, etc. But we do know from surveys that debt is becoming a real problem. The incomes are not that high, and while people have saved a fair amount, so you can see amounts saved for loan down payment, most people have saved less than 100,000. And then you do have some people with more than 100,000. So we have looked at express demand, how they've tried to finance the housing, etc. And the top reasons for saving, because they do have savings, is they want to build a house on land they already own. So should we be thinking about supporting home construction rather than what we have right now, which is apartments? But as FSD, we feel both are important. So this is just a very small sliver of data. To be honest, I feel we learned less than we hoped to, and I'm ready to say that, But we've got a data set that now we want to pilot with finding a pension contributor and doing the second chart. So I'll stop there. And this data, the dashboard, will be publicly available once we have our webinar in November. Thank you.
Hello, everyone. My name is Beatrice Mwangi from the Center for Affordable Housing Finance. I serve the East African region, and I'll just take us through two tools that we have developed with the support of FSD Kenya. One of them is a dashboard, a data dashboard on housing development supply within Nairobi metropolitan area, so not only the Nairobi County, but 3 more counties around the main city. And then the other one is just an online platform on the legal review. We'll go through that later, so we'll start with this. And it's a public dashboard. It's available to the public. You can check it out on the CAHF website. And it mainly shows what housing is being supplied within Nairobi metropolitan area, whether high-end, low-end, whichever market segment that there is. And I think just to start us off, we've done this for the last 3 years. So we did it in 2021, 2022, and we've recently updated it again. And the most difficult part is not getting the data, but just understanding the quality of that data and making it good enough to be published. And I think the biggest challenge is the sharing again. So while developers have this data, other custodians have this data, the sharing part is really difficult. So you depend on what you can collect from websites, from interviews with property managers. But I think a call to all of us, as we try to increase the supply, we must be willing to show what we have, enables us to learn from one another and to see where the opportunity lies or where the gaps are. So far we have been able to feature on the dashboard around 30,000 housing units, around 1,000 properties, and this just shows the concentration of it. This dashboard allows you to filter what data you're looking for. So here is where the main selection is. So it's 2021, 2022, and 2024. You would ask why we skipped 2023. The data cleaning process is the most difficult part. Before you get it to a stage where it's good enough to go up on a dashboard, really takes a bit of time. And that's the reason why we could have some gaps. The idea is to make it cumulative and have it every year. So it's a useful tool for everyone. But I think we all need to play our part if this is going to be achieved. Other details that appear, so we give the details of that specific project. And these are details that are really not on the inside or the back end. They're mainly the price, the size, the number. So we're not trying to get information that will probably compromise anyone's competitive advantage. And we provide this, and except showing where they're located, we show what amenities are there, how they access the utilities, is there water on site, do they do boreholes, etc. Unfortunately, we're not able to show the occupancy or the sales percentage. Again, those are details that are very hard to tell, depending on where you get them from. So we try to avoid that part. At the bottom of the dashboard, you can get some graphs. From a buyer's perspective and from a developer's perspective, we provide graphs that speak to you. So are you looking for the price? Would that be the most important part, or most important indicator for you? Are you looking for the rental yield? Are you looking for the rent per square meter? So we're able to provide that, and this is just a drop down of all the details that we're able to provide. We also give some details on mortgage installments that you would need, for example, to own a certain property. But then that we give a disclaimer on what terms are used. Most of the times we have used the TMRC rate, which is at 9.5%. But given that's not what everybody accesses, we also tend to give a detailed analysis of if you use the market rate. That's not the single digit from TMRC. At the bottom of that dashboard, we provide a feature that allows you to give feedback. Again, this is data that we collect from phone calls, from websites, from brochures. It's bound to have a bit of, we could have some errors here and there. So we insist that the user is part of the validation process. So once you get a chance to look at that dashboard, please feel free to give us a bit of feedback. We're doing our part on the CAHF side to provide the data we can. We'd be very happy if you could help us just make sure what we have is really correct. Yeah, and that's basically the dashboard. Please visit the CAHF website and get to interact with it. Then the other tool that we have, so again, this is also funded by FSD Kenya, SITA, thank you. And it's the legal policy and institutional review of the affordable housing sector in Kenya. So in 2022, FSD Kenya worked with a consultant and reviewed the entire housing, the regulatory framework that affects the housing sector. They were able to review around 148 documents. So policies, acts, guidelines, all those documents, and even some case studies. And they were able to put that in a document that was around 300 pages. Again, I'm sure even the little pamphlet that you have, you struggle to read it through. So we went ahead and put this on a very simplified platform that allows you to peruse through that report like a book. So this is how it looks like. This is a front page. And this is the table of contents. So you can pick by the titles what you want to look at. Those documents are segmented or classified in terms of the value chain. Are you looking at land? Are you looking at financing? Are you looking at the sales? You're able to get those details. If you would like to download, for example, a specific part of this book or this representation of the legal review, you're able to export a PDF, a very simplified version. We also provide links to where these documents sit within the government website, mainly the Kenya law, which is updated often, and you're able to find out which is the most recent law. Again, we go through this legal review every 2 months and update what has changed. I think those who might be very familiar with Kenyan, there's so much happening, so many changes every now and then in the legal review or in the legal framework. So we go back and just work with the legal firm to update this. So it's very updated, and you can get all the laws that affect the housing value chain on this platform. Again, it's just to help market players interact with the law more easily, understand what you need to be aware of, and just for overall market development. Again, this as well is open to your feedback. It's our way of leveraging technology to make the housing market work, and we'll be very happy to get your feedback. Thank you.
I have 5 minutes and maybe 10 slides to get through. But I think I was reflecting when I was listening to Sita and Beatrice. My name is Alan Mutuma. I am the Open Access Program Manager. So the vision that was born by Sita and Kesia, I have the job of bringing up the child on a daily basis, as it were. And when you think about what we're trying to achieve in open access, I think it's a couple of things. The first one is that we want to save the resources in this room to go towards the right objectives. And by that I mean is that we want to reduce the amount of resources that are being spent to access data. When you think about it, as developers, as potential developers in the room or financiers, the information that Beatrice has just shown us in terms of the number of developments coming up in a city is what makes up the stuff of feasibility studies. So, you know, any developer who is operating in a city will spend X amount of dollars trying to understand the investment landscape there. But if it's all pulled together in a portal where you can access that information, then you reduce the amount of cash that's being spent in accessing that information. And likewise for the Git book, for the legal Git book. If we could have, you know, a section where all the laws relating to affordable housing in South Africa, in Mozambique, in Cameroon, are reposited in one central repository, it then makes it easier for investors to understand that landscape. And that's what we are trying to achieve. And the open access is being piloted in Kenya, but the intention of it is to grow beyond the borders of Kenya. And that's what we really want to achieve from open access. So what I wanted to take us through is a data collection tool that we're doing. Again, I'll step back and say that, as Sita mentioned, the intention is to collect information where the action happens. So this is at the project level. Because, of course, those operating in the space know that public sector data or administrative data has significant gaps. So being able to understand where the action happens will allow us to have a clearer picture in terms of what the opportunities and the risks exist within the investment value chain, investment value chain of housing. In terms of how the process of open access works, we've got a bits and bits of in terms of how the different tools we're developing have, but the overarching sort of intention of open access is to be able to collect data, and we've categorized that data into 5 main pillars. So we have the product information, and I'll reflect back to Eta's presentation. The pie charts that she showed about the unit sizes and you know, associated costs is what the product is for. We have the process information in terms of the step, the time, and the cost it takes to develop these products. We have people information, gender falls in there. We also have income that falls in there. We have performance in terms of what the return of investment is, both from a social and a financial return perspective. And then we have 2 more pillars that are not there, my apologies, practice and professional data, in terms of being able to save the cost of replicating mistakes. So you might wonder, you know, how does open access work? You know, sometimes it sounds quite ambiguous, but in terms of the actual operations of it, is that open access signs an NDA and data sharing agreement with a developer. And basically, that document governs the data relationship between ourselves and the potential sharer of information. It can be a developer, it can be a financial institution, it can be a DFI, but that's what governs the relationship in terms of how we should be able to handle the data and the approvals, of course, that are required, and even where the data should sit. After signing the NDA and data sharing agreement, then the participant in open access shares information about a particular project. It can come in a Microsoft Excel sheet, it can be a PDF, a PowerPoint presentation, and then we have to go through the process of standardizing that information so that we can be able to compare apples for apples, because, you know, different developers, different institutions have different ways of looking at product, at people, at process, and the performance of the sector. So we go through the process of standardizing that information. And, you know, we developed a standardization tool that sat on MS Excel, and that's how it looks like. It was quite robust. I mean, there are like 5 worksheets and 300 rows of different fields for us to fill out, so that the output of this will standardize the way we're able to look at this particular project. But of course, there are limitations in terms of how we look at this, of this particular tool. It is difficult to be able to do cross comparisons across different Excel sheets. And so what we've done is that we've worked with iBuild Global, that's Lou Schulman and his team, to develop an automated template that makes it much easier to collect this information from developers or from financial institutions about the projects that they're implementing within this space. And I was meant to do a live demo of this particular tool, but I just took screen grabs to be able to just show us how the tool sits. So it starts with a project summary page in terms of the location and high-level information. And then we have a user guideline page that stipulates, how the user should be able to use the tool. And then now we get into the nooks and crannies of it. Now we have the general inputs tab. On this section, you're able to see all the different tabs that there are in terms of being able to fill out the information. So from the property information to the construction arrangements, to whether they are green aspects of the project, and it's very easy to fill in so that we can be able to make sure that the burden of sharing information is not too much to the investor or the developer. What's interesting as well, we have a CAPEX input tab where you're able to put in the costs. Again, we're able to delve into the details of it and the summaries of it. So if you want to share general details, you can be able to do that. Or if you want to go into the summary of it, you can be able to do that. I think I'll skip all the way to the last section of the tool, which is the most important, at least or the most interesting from my part, the process data, which we realize is not being collected. How much time is being spent in terms of construction delays, in terms of regulatory delays, and we are hoping to be able to put a dollar figure to that. If one is able to tell how many days a project delayed from one step to another, you can start being able to place particular dollar figures to this particular issues that come up within the space. So I know I've like rushed through it, but I think the point that I want to make is one call to action for any participant who would want to know more about the tool, more about open access. I'll be happy to sit on a one-on-one basis and show you how the live tool works. And even just find out anything about the Open Access Initiative. We'll be very keen to have those conversations going forward. But yeah, back to you, Kezia.
Thank you so much. Thank you. I'm very sorry to rush you. I think what would be really great, though, is please try the tools and work with them, and then contact Sita or Beatrice or Alan or me about the tools. Some of the things, for example, the Nairobi Metropolitan Dashboard is something that we're trying to do in Nigeria as well with the Abuja Builders Coalition. The Zamara study, I think actually, I'm going to stick with it. Sita and I are having a debate about it, but I really think that large database-driven organizations, so pension funds or large employers, that data is really valuable for coming to understand the character of that demographic that happens to be in that data set. And I think there's lots that can be done there. So different ways in which to explore the data, and then as Alan says, to make it so that people aren't doing that over and over and over again in the same way, just to satisfy a feasibility requirement. So thank you very much.
We have data